Hello friends, this is Shivam Katoch with our channel GIB, Simplified GIB and CIB. As GIB, second part, financial and accounting exam is on Saturday. So today I am with one question which is very most important as point of view of the exam. So we see first there is one balance sheet is there, very small balance sheet for ABC Limited company. Okay, so this is profit and loss statement and this is balance sheet. So friends, these are assets, these are liability. Okay, so we will take example and we understand what is that. Let us suppose ABC is one rubber company. Okay, so they having turnover means how much sales they having for 1 year. It is 8030. Cost of sales is direct cost like labor cost, then electricity cost, then all the cost which is directly related to the company. Rubber cost like they have to take one area to other area, they have to sell, they have to advertise. All direct cost are cost of sales. Distribution cost, the distribution of the rubber is distribution cost, that is indirect cost. Administration expenses like stationery or some bonuses, or we can say insurance, anything administrative, selling and general administration works like puja, like festival advance, all administrative expenses. Interest which is given to bank, taxes which is given to government of India, dividend which is given to their shareholder who invested in the company. After that the profit will come. Okay, so profit also different type: gross profit, operating profit, net profit. We will see in the later. Now we go to balance sheet. This is the balance sheet, like what is the asset with the company and what is the liability, like loans, from where they generated the cash, and from the cash what they have made. Okay, so asset also two types: current assets and non-current assets. Current asset which is perishable within 1 year, non-current assets which is more than 1 year. Liability same, which is perishable in 1 year is current liability, which is not perishable in 1 year is non-current liability. Okay, remember that thing. So here asset, fixed asset, plant and machinery. So plant and machinery, like in factory, rubber factory, we having machines to make rubber, like one factory building is there, computer is there, lorry is there. Everything we can see is fixed asset, is non-current assets, and this is asset part of the company. Current assets which is perishable in 1 year. In current assets, anything you can, like stocks are there, like payments which is has to come, all are in current assets. Stocks like rubber stock. Debtors, debtor is like I supply to someone, like I am a rubber factory, I supply to company A, I sent the delivery, but the payment has to come within 20 days or 25 days. So this payment we can put as a debtors. Bank is cash. Okay, so this, so this total is, if you see, stocks, debtor and bank balance is total current asset is 2800. So stocks plus debtors plus the payment has to come, and bank balance is current assets. Now we will do current liability. Current liability comprise of this: trade creditors, like advance payment you have taken, like you purchasing raw material from rubber company for rubber company, so advance money you have taken, that is trade creditors. Dividend which you have to give who is putting money in your company. Taxation, tax. Accruals, like whatever the funds you have to pay, that is accruals. Debenture is the share, all that's the profit. So directly we will jump the question. My student, you remember, we have to remember the main is the formulas. What is gross profit? Just gross profit is turnover minus cost of sales. So what is turnover and what is cost of sales? Just you have to minus and your gross profit will come. So always remember gross profit, turnover minus cost of sales. Then what is operating profit? Turnover minus cost of sales minus distribution cost minus administration expenses. All expenses divided by turnover minus by turnover is your operating profit. Then profit before tax. Profit before tax is operating profit minus interest. So whatever operating profit minus interest is your profit before tax. Always remember, operating profit, total your sales minus all expenses minus taxes is your profit before tax. Profit attributed to shareholder, profit before tax minus tax. This is you have to give to shareholders. Retained profit. Retained profit is what? After giving dividend. So profit attributed to shareholder minus dividend is your retained profit. Gross profit margin. Where is the margin come? Always remember, down turnover will come. Turnover, gross profit up, multiply by 100. Gross profit is first question we have done. This is turnover, multiply by 100. Then operating margin. Operating profit margin is operating profit divided by turnover, multiply by 100. Return on capital employed ratio. It is nothing but operating profit divided by total asset minus current liability. Operating profit, second question we have done, total asset minus current liability. So total asset is this plus this and current liability is this. So this is operating profit, total asset minus current liability. Current ratio is what? Current asset over current liability. So here question you are given, what is current ratio? They will ask any question, you just write, tell current assets, total current liability, current asset divided by current liability is your this current ratio. But is quick ratio? Quick ratio is nothing but current asset minus inventory divided by current liability. Here current asset is 2800 minus inventory is stocks and divided by current liability. Current liability is 1100. This is your quick ratio. So what relation is between current ratio and quick ratio is, if you see, current ratio minus quick ratio is equal to current asset by current liability minus current asset minus inventory divided by current liability. So if you cut it, it will come current ratio minus quick ratio is equal to inventory. This is the relation. From this relation, one more question we can take. So here friends, one more question, same. Current ratio this, quick ratio is this, and inventory is this. So what is current liability? As I told, current ratio, current ratio minus quick ratio is equal to inventory. So here current ratio is 3.5 minus quick ratio 2 is equal to 24,000. So 1.5 is equal to 24,000. So x we will take as 3.x because it is in ratio. So x is equal to 16,000. So 1x is equal to 1. 1 means this is current liability. Current ratio is current asset, current liability. So they had current liability. Current liability is 16,000. Then they asked what is current assets. So this is current assets. So 16,000 multiplied by 3.5 will come 56,000. So this is your answer. I hope you learned something. If you have any query, any question, you can ask directly in description box. So tomorrow I will come again with another question for your further reference. Thank you very much, friends.